In reality, the US war in Iran has never been about Iran itself. Trump and the world's most powerful country are pursuing entirely different goals, which combine Israel's interests, the fight against China, the development of artificial intelligence, and the elite's plan to create a new financial system, a digital system. One of the problems the US is trying to solve in Iran is to exert significant pressure on China by depriving it of a market for affordable raw materials. Iran is one of the key suppliers of cheap oil to the Chinese economy. According to analyst estimates, up to 90% of all Iranian oil exports go to China. And the main hub of this entire system is the Strait of Hormuz. About 20% of global oil trade passes through it, so any tension surrounding Iran automatically becomes a problem for the entire global economy, including Europe. But the US is willing to accept temporary problems just to spite its main competitor. But something went wrong. On the one hand, Iran is blocking the strait and even attacking tankers carrying American oil, while on the other, the strait remains open to the right tankers, such as Iranian ones, that are transporting crude to China. Since the start of hostilities, Iranian oil shipments to China have only increased, and all because the strait is not formally blocked, but is simply being fired upon from the Iranian shore. To change this situation, a ground operation by the US and Israel would be needed, since exposing the Navy to attacks from the shore, in reality, the US war in Iran has never been about Iran itself. Trump and the world's most powerful country are pursuing entirely different goals, which combine Israel's interests, the fight against China, the development of artificial intelligence, and the elite's plan to create a new financial system, a digital system. One of the problems the US is trying to solve in Iran is to exert significant pressure on China by depriving it of a market for affordable raw materials. Iran is one of the key suppliers of cheap oil to the Chinese economy. The question is what Iran is getting from China in exchange for its oil. We're talking about the international financial system, but we'll come back to that later. For now, let's look at the interests of Israel, which is manipulating the US to destroy Iran's nuclear program. Back in 2012, Benjamin Netanyahu addressed the UN General Assembly and stated outright that Iran could reach a critical level of uranium enrichment in the coming years. At that time, he showed the famous slide with a red line, beyond which, he claimed, the path to nuclear weapons begins. A few years later, in 2015, Netanyahu addressed the US Congress and asserted that the nuclear deal with Iran would not halt the program, but, on the contrary, would give Tehran time to continue its development. In other words, if we put all these statements together, it becomes clear. Israel has been warning about the threat posed by Iran's nuclear program for over 14 years. A recent report by the International Atomic Energy Agency confirms that Iran has indeed accumulated significant stockpiles of uranium enriched to 60%. This is the highest level among countries that do not officially possess nuclear weapons. If Israel and the US had not launched strikes, it would have taken Iran just 1 week to enrich the uranium to a level suitable for building a nuclear bomb. Just 3 days into the new phase of the conflict, Netanyahu once again attributed the situation to the need to eliminate the nuclear threat. This would have been impossible without American aerial refueling aircraft. So Israel promised the US other benefits from an attack on Iran in order to resolve its own problem.
Weapons. So these files conclusively prove that Iran is brazenly lying when it says it never had a nuclear weapons program. The files prove that. But here's what happened next. Iran was faced with mounting pressure in 2003. You remember that. That was following the Gulf War. So it was forced to shelve Project Ahmad. But it didn't shelve its nuclear ambitions.
Literally in the first few days after the strikes on Iran began, investors started actively buying shares of defense companies. We're talking about giants like Northrop Grumman, RTX, Lockheed Martin, and Palantir. These are companies directly involved in the production of weapons, intelligence systems, missile technology, and military programs. And the market works very simply here. When a major conflict begins, investors immediately factor in the growth of future military orders. More tension in the world means more defense contracts, larger defense budgets, and more purchases of technology for the military. According to SIPRI, global military spending in 2024 has already exceeded $2.7 trillion. This is the highest level since the Cold War. And this doesn't even take into account the current conflict in the Middle East, in which the US alone is spending about $41 million every hour. And over the entire duration of the conflict, about $18 billion has already been spent. But the most interesting thing here isn't even the defense-related stocks. The oil market demonstrated just how strongly such events affect the economy. After the first reports of military strikes, oil prices shot up because the market feared supply disruptions from the Middle East. But then something unexpected happened. Oil prices began to fall just as quickly following statements about a possible de-escalation of the conflict. How many billions of dollars do you think were made by those who knew exactly when Trump would announce plans to quickly end hostilities? And how many billions went to those who knew that the US president's statements were just a ruse and that the conflict would drag on until at least the end of March, if not longer? And here, the next factor comes into play. During the current conflict, Iranian sources stated that the offices and infrastructure of major American tech companies could become legitimate targets if their technologies are used for military operations. The list of potential targets included Google, Microsoft, Nvidia, and several other tech giants. And following attacks on digital infrastructure in the Persian Gulf region, analysts began suggesting that data centers could become a new critical target in modern conflicts. At the same time, another highly unusual conflict is unfolding within the US tech industry itself. This involves AI companies competing for government and military contracts. For example, OpenAI has already signed an agreement with the US Department of Defense regarding the development of artificial intelligence technologies for national security. However, one of the largest AI companies, Anthropic, found itself at the center of a scandal after its management refused to provide its models for the development of fully autonomous military systems. After that, US authorities began to view the company as a potential risk to national security, while the company's competitors, on the contrary, began to secure new government contracts. The most interesting thing is that users sided with Anthropic. Their chatbot quickly rose to the top of the download charts, knocking ChatGPT off its pedestal. And yet, somehow everyone quickly forgot that it was Anthropic's AI models that were used during the military operation in Venezuela. So, we've moved to the next level of understanding conflict, financial manipulation, and the testing of artificial intelligence in the context of real war. Let's go even further. A quick reminder that you can subscribe to the channel. Oil for China, the threat of nuclear weapons, the arms race, market manipulation, and testing the capabilities of artificial intelligence all fit perfectly into the logic of the war in Iran. But one question remains unanswered. How does Iran obtain funding? The country has been under sanctions for decades and is cut off from global financial flows, while the rest of the Middle East actively uses the so-called petrodollar system. This is just a theory, but the US has already passed legislation on stablecoins, and recently, Trump personally spoke out in support of a bill to regulate cryptocurrencies. The US president is going against American banks because they are hindering his efforts to promote the concept of a new global financial system based on dollar-backed stablecoins. Financial giants such as BlackRock, Fidelity, and others are actively involved in this story. In fact, these companies have legitimized the cryptocurrency industry by launching Bitcoin ETFs. And just yesterday, BlackRock launched its own staking ETF for the top two cryptocurrency, Ethereum. Larry Fink supports the White House's agenda while simultaneously promoting his own projects for the tokenization of all assets.